Good morning, everyone. Welcome back to another weekly review. I'll be talking about week 25. And starting out with the economic calendar, you can see we had the FOMC press conference and NFP, or the unemployment rate, in the same week. And this causes a lot of volatility, especially, the first week of the month. When you have this much volatility, it's always a little challenging to understand what's happening. And because of how insanely excited price was this week. You'll see what I'm talking about on Wednesday, Thursday. But it was hard to actually find trades throughout the week because there was a lot less manipulation on a lower time frame, and we were serving a higher time frame, macro delivery. But let's get into the Sunday weekly analysis. So I'm still going with the 60-day look back and the 60-day look. This is supposed to stay ahead. And then here I'm mentioning that we seem to have retraced and left a little of the wick closing above the mitigation block. I would be interested in seeing an immediate rebalance with last week's candle. So we're showing that we're being supported here. We're closing above it. It's okay. If we do start a retracement, where would I be looking at? Consequent encroachment of this inverse value gap also lines up with the low of the candle that made this initial move lower, and that would immediately rebalance this entire candle here. And so this is one thing I was watching. I wanted to see if we were willing to come up there and leave. Now this is an immediate rebalance. If this happens and we leave this breakaway gap up here, we will be very bearish in the next coming weeks, which is in line with what I wanted to see, within that 6-day look back. So that would help my 6-day look back, 6-day look ahead, and it would be in line with what I'm thinking, which is why that's a possibility for me. Now that is exactly what happened. I noticed it just now, right? Because I forgot about what I had drawn out, but this is exactly what happened. We came up to the previous week's low on the week of 15th, and we completely bounced out the 22nd week of 22nd candle, right? And then closing displacing lower. So if we start to come back up here in this area and keep on retracing, I would be bullish and I'd be looking for the highs. I don't want price to come back above the 29th candle high. And in some cases, maybe it can. Maybe it can wake up there really quick. I just don't think that we have the volatility. I don't know if we have the volatility next week or not to do so, but I mean, it should, with how far it displays, just continue going lower. We should be seeing more down close candles attacking that sell side liquidity. Maybe not any lower. We'll see. But that is what I'm basically looking for right now. But I would be interested. One thing I actually didn't do is I didn't pay attention to that weekly chart because I completely forgot about this. And it's just now looking at the weekly chart. This is the first time actually in the whole week, other than on Sunday, that I looked at the weekly chart, because I would have seen that it immediately rebalanced, and I completely forgot about that low on the week of the 15th. This low right here, completely forgot about that, and price ended up immediately rebalancing and being very bearish on Thursday. So that kind of explains how bearish Thursday was, but I'll get into that later. I would be interested in seeing something potentially like this play out. We are at a 20-day look back, and so retracing to reach a premium is allowable this week. However, I will be watching closely to see if we are very bearish at the beginning of the week and we get a successful immediate rebalance. I like how Thursday has much liquidity pent up. It is extreme since Friday traded within this range. Now, if we had done this and we had immediately went lower, I would have been extremely bearish, even more bearish. I would have been like, okay, it's really gonna get sent, and maybe even past that low sell side liquidity, right? Because it did move up into the previous candles range, and it wasn't really a big down close candle, so there's not really much to immediate rebalance. But it's still nonetheless an immediate rebalance, and I was watching to see if this was going to actually work as an immediate rebalance. And at the beginning, it kind of did, and I kind of got hooked onto this bias. And this was taken on Friday. So this is not the daily candle. This is the daily candle on Friday before it closed at around 8:24, right? July 26, 8:24. And so this was kind of like my bias on Friday. I wanted to see not trade up into the bearish fair value gap and sort of reject that area and then see if it wanted to run lower, right? And this is the second scenario that I took on July 28th. on the Sunday. Right, this is in line with the weekly immediate rebalance with that low there. Right, we come up to about that low, immediate rebalance inside the daily inverse fair value gap, and we continue to go lower. Right, that was the second scenario that I had. Right, the problem this week was that we started to go lower, giving the impression that we had the first scenario, and then we went up to complete the second scenario, and that kind of confused me a little bit, if I'm being honest. But there are areas I'll be careful to target at a deep premium, specifically unfilled new day open gap, regular trading hours gap from last week. I think price would need a lot to draw up here, and I said a lot to draw up here because this is really if we kind of if that immediate rebalance doesn't work out and we start to really trade higher, I just have those in mind. Those are open areas that we may not never trade to, but they're just there in case we fail and we start to actually have a bullish bias and we're on the wrong side of the market. And then I have these areas that I can be targeting. And then nothing changed on the dollar. I still think we will draw higher, but it's taking its sweet time. All right, so we came down to sweep that sell side liquidity on the dollar. It's just taking a very long time to actually do anything, and more or less consolidating. This week, however, we started to see a big bearishness on the dollar. Right, it went down quite a little bit, and so this bullish bias on the dollar isn't really rooted in technical analysis because it's obviously consolidating right now. It's rooted in, well, fundamentally. I think the dollar will go higher. Just wait. It absolutely will go higher. Just when it will go higher, I don't know. But when it does go higher, it's not gonna stop. It's gonna go way up there. Just like back in July 2023, when it started to really run higher and almost never retraced. But so yeah, we could still be seeking some sell side retracing on the dollar, but with a bearish bias on the dollar and a bearish bias on the indexes, it's showing a lot of high resistance liquidity days, and it's making it harder for these indexes to reach lower, even though my bias is lower on them. It's showing that it's obviously lower quality. It's not the best, and so it would be better if the dollar would be going higher. I'd probably be able to find better trades, and better weeks. But we'll see what the dollar does going forward. And I think that's all for the weekly analysis. Alright, this is Monday. Now Monday, I say that we start off the week with a wick. This is signifying a failure to trade higher. I would be expecting quick lower prices tomorrow if we leave this gap open, because we would have an immediate rebalance and price shouldn't go back above Monday's high. Right, so this is an immediate rebalance though. I'm going to change this and correct it, but I just want to say that this is not an immediate rebalance. What this is, if we have an immediate rebalance like on the weekly chart, right, we should run up to the low and then displace from it. But where the body's closing here, they're showing that it's not willing to be bearish off of that immediate rebalance. Right? And even though the next candle can start consolidating, it should do it lower, because the first candle should have had quickly ran up into that wick and then displaced lower. And so we didn't have that displacement. Instead, we kind of retraced into it, into the wicks, and then kind of sticked around a little bit with the bodies closing up here. And so this was not an immediate rebalance. But at the time, I thought that, okay, maybe this could be an immediate rebalance if tomorrow starts to move lower. Right? And so, in the morning, we were close to Thursday's high. So before the day closed, I was still bullish, looking to run into this inverse fair value gap and above Thursday's high. But we were so close and we didn't actually run it. And so at the time when I was watching this constant encroachment show resistance, I was actually looking to finish off the 930 Judas swing above Thursday's high, and I was scared of going short at the high of the day there. But it did end up going lower, and then I took part on the second stage, which I talked about on Monday when I streamed, and left the bearish order block, which resisted price, continuing to send prices lower. And then in the afternoon, we retraced back up to the bearish order block. This is the second stage with the 15-minute constant encroachment there, or the inverse fair value gaps, whatever you want to use, or the breaker, right, high, low, higher, high. and then it runs all the way down to the weekly mitigation block near these lows from Friday. But notice that we're above that midnight open. We're retracing all the way to a premium, and then we continue to run lower down to that sell side liquidity for lots of points. So here's the breaker I was using: high, low, higher, high. So we quickly tagged this high there, which was a total soup, and that's where I shorted, and I held it for about 80 points down to these relative equal lows there, right? And that was, and then down here we had a nice reversal with the same thing, that low, high, lower, low. Now the best trade in my opinion was the high of the day there and here, right? And the reason why, if you compare it to, why is it, okay, well, I guess it won't let me. So I guess it won't let me do that. But if you compare, this high of the day and you look at the breaker, high, low, higher, high, you see the breakers formed in a really big premium compared to this, the first low, of the range that kind of is part the low hanging fruit. And this is a low hanging fruit objective. If you draw a fib from that low all the way to the high here, that breaker is in a premium, which means it's good for shorts, right? Before you get down to a discount. Same thing down here. It's in a very big discount, right? Low, high, lower, low. You take the dealing range all the way to that high or this high, whichever one you want to take. It's in a big discount, and so price quickly runs up back to a premium to the bearish order block in the afternoon. And so these are the trades that I took on Monday. I had went short early and I lost, and then I went short again there. I wanted to go short. At first I was looking at longs. I wasn't going long because we were above the midnight open and we were in a big premium, and I wanted price to run up and hit Thursday's high, but it didn't, and I was uncomfortable. It would have been a good short there. This would have been a really good short at the high of the day, but I was uncomfortable because of the Thursday's high, and so I stayed out and let it kind of accumulate and show the second stage, evidence that I really wanted to displace lower, and I wanted to use this bearish breaker as resistance, which was the up close candles there, which it did, and then it continued to run lower. And in the afternoon we got nice price action higher here. All right, and that's it for Monday. So now to Tuesday. Okay, price was super bearish today. This is the immediate rebound scenario I had in mind from Friday. I am wanting to see heavy lower prices from now on. If this does not occur and we trade back into the range, I would be expecting a reversal. And this is where I was wrong. This is where I was completely wrong. And a good thing I didn't take any losses from this bias, from being wrong here. I just observed it, and I was sitting on the sidelines. But this is where, I thought this was an immediate rebalance, and when I saw Tuesday go lower, I assumed that we would just go lower and we would not go anywhere near, the high of the week. And if we did, then I would be expecting a reversal. And so this is where I was completely wrong here. Instead, this was just a quick liquidity sweep because Thursday and Friday had left lots of liquidity at its extremes, high and low, right? Because Friday traded within Thursday and Monday too. And so there was just an extreme amount of liquidity at Thursday's low that we reached down quickly to get. And this is also all ahead of FOMC and NFP. And so you have this ugly, lower quality price action. It's not typical price action where we make the high of the week and then we go and we distribute lower and expand. Instead, this is a bearish week, but we only went lower Thursday and Friday at the end of the week instead of Tuesday, Wednesday, Thursday, as SET usually teaches that there's like a reversal Tuesday. If not Tuesday, it's going to happen early Wednesday morning, but instead it did not happen, and you'll see what I'm referring to. But price return once more to the bearish order block from yesterday before continuing another run lower, right? So pretty simple there. The overnight session had only went higher. And so on Tuesday, I was only looking to go lower because I saw that we had a higher time frame level, which resisted price in the past. I wanted to see if it would resist price again. And we also was at 930, which is high probability for a Judas swing or reversal. We also had went up all day. And so everything I needed to really look for shorts was there. There was liquidity lower. We were in a big premium, above the midnight open. And so it was good to look for shorts. Unfortunately, I did not wake up on time. I had talked about this on Tuesday. I was pretty disappointed. But I don't know why my alarm didn't ring. Maybe it rung and I turned it off. But I did not wake up on time. And it's not that I hadn't gotten enough sleep. It was a cricket in my room, or it was outside my window, and I had blocked my window with pillows, and there was no light coming in. So when I got up in the morning, I guess my alarm rang, and it was super dark in my room, and I was not used to it. And so I went back to sleep. But yeah, this was a really good trade. Right, we ran up into the 15-minute PD array and used that as the higher time frame, 15-minute or minimum PD array. And then we had a 5-minute or 3-minute sweep while immediately rebalancing, refusing to trade into that gap up there, leaving a breakaway gap. And then, the thing is, like, I had gone up at around 10, and I had seen this play out. I had seen this as a possibility. I saw this gap form, and I had gone up on the charts at like this candle, and it was frustrating because I wanted to trade that exact idea, but it just happened too quick. And by the time I was done answering emails and messages, I was trying to hurry up, but by the time I was done, it had already ran, and I just chose to stay out of it instead of trying to chase. And it never gave a retracement. I was willing to wait for a retracement, but it never ever gave a retracement, and that was pretty disappointing. But things like that happen. I don't know why it's not loading the next one. Okay, but you can see it kind of right there. It won't load. But we had the inverse fair value gap and a bigger bearish fair value gap, which could have been used to short. And then there was another fair value gap there. Again, you could have used a short, and it just continued to run lower, back down to the midnight open. For this is a lot of points. So there was a lot of volatility this week. Unusually large volatility for what July or last month in July used to give. Like, we're seeing these huge 80-point moves within 15 minutes all the time, and price is running 500 points every day, and it's not typical for what the summer was in July. Okay, so we had a big bullish day today, and this invalidates my bias trade lower, and so price may be looking for more premium, conveniently at a 20-day look back period. So I will proceed with caution because of this invalidation of bias. And my next target is to move up to new day opening gap. And so this is why I was not doing much. I was more remaining on the sidelines, right? Because when I saw this big up close candle, it kind of confused me. I had not looked at the weekly chart, which is what I did wrong this week. If I had looked at the weekly chart and seen the immediate rebalance, it would have made more sense. But because I was too focused on the daily chart and had forgotten the idea on the weekly chart, it was confusing me a little bit, and I decided to remain in the sidelines. Right, but what I do need to do in the future is to pay more attention to weekly charts, especially when there's ideas on it that are relevant towards the week, and maybe even would be good practice is to review my weekly analysis every day, right, at the end of the day, right, because this immediate rebalance is something I had completely forgotten about on the weekly chart. But prices did start to go higher throughout the whole day on Wednesday, and this is when I got up and I saw midnight open and I saw how high price was. Even during FOMC, there was no way I was looking to trade. I did not, I streamed it on Wednesday, and it did not look like it was getting ready to go lower. I said what I wanted to see in order for it to go lower, but after this much of a move throughout the day, even though it's FOMC, you don't really want to see much happen, and not much did happen. I mean, usually FOMC moves quite a lot, but nothing really happened. Price was just super bullish all day, and then nothing happened during FOMC, and it's normal because price trended. And so after a trend, you assume a consolidation, and every session trended. And so why would you want to see a continuation or a reversal? You can, but it's not going to be. It's going to be more choppy and lower quality, especially reversals less likely when you've trended all like this. But yeah, then we had Thursday, which immediately went lower and started to engulf. And this is where I was really getting confused. I was like, okay, what is happening? Wednesday only went up, now Thursday only went down, and I was still not realizing that we immediately rebounced that weekly chart. But at this point, I turned back to a bearish bias, and I was good for Friday, and I did find a good trade on Friday. But I didn't like this breaker in green, right? The one here, and I was looking at charts on Thursday, and I was seeing that low high lower low, and this dealing range here, right? If you look at if you're trying to go long on Wednesday, you're using this breaker to support a bias to continue going higher throughout the overnight session, this isn't really nice, and would require a lot more strength, which it did have strength to get past, because that breaker is formed completely in a premium to where the liquidity is at, right? But we get above those relative equal highs, and now you want to see it maybe act as support. The problem is though that we went way above it, and we've taken a lot of liquidity, and so coming back to that breaker, maybe the way we did, the way how bearish we were, may not really continue and bounce, and instead I watched it completely fill it, like without seeing any sort of support. I'm talking about like short-term support, and instead closed beneath it, and now it's closed way beneath it, displacement past it. And this was the morning. Another thing I didn't do on Thursday is trade, because look at where the midnight open is. I wasn't really looking to go long. I did call sort of a short. I said I would be interested in shorting as this was dropping, and I would have made money if I had tried to do it, but I was uncomfortable because of how lower underneath midnight open we were, and so I didn't try to do anything. All right, and then there's nothing there, but yeah, I didn't really show anything on the lower time frame because there isn't really anything that. It's just a simple institutional order flow entry drill that brings you lower, but you have the nice Judas swing at 9:30, which makes that one move higher to midnight open, and that's it. Right, and we displace and we continue displacing lower. But another thing, this day moved like 800 points, and so the trade that I wanted to take, my stop loss would have needed to be 50 points. I didn't want to do that, and so I just sat on the sidelines and watched price draw lower the way it did, which I was not expecting it to draw this far beneath the breaker. But then on Friday, things are a little bit better. I have a better bearing on, exactly what is going to happen on Friday. And so to end the week, price dropped lower to the sell side liquidity, and not the best price action. We had further lower prices after already dropping lower. There is a lack of manipulation. I believe this is to fulfill a bigger macro move or manual intervention. And this is to fulfill a bigger macro move, which is the immediate rebalance on the weekly chart. It would be like them to drop it ahead of belief in rate cuts. So, as you can see, Friday is not really all that great. We just kind of went lower, like it wasn't really pretty, and nonetheless, it was still nice trades. You had 830 NFP, which drew lower, and I was trying to long into a retracement to that 15-minute bearish fair value gap. Wasn't able to find what I wanted to see, and then we sweep that short-term high at NFP during the 9:30 open, which then sent prices lower before reversing. I did find a trade during lunch when it dropped down into that 15-minute bullish fair value gap. I looked for a sweep to trade back to a higher, a sweep in a premium. So I was targeting that high. I didn't take profit at that high, uh, but I'll show the trade in the next slide. But the idea was that we had expanded higher, and we were wanting to chop around, and so before going back lower to discount, I wanted to see a sweep on that liquidity, and there was a nice opportunity that I saw, which was my model. So we had the 5-minute short-term low get taken out as we dropped into a 15-minute bullish fair value gap, and then I took profits at about that candle there, and then we resumed going lower. In the morning, this was pretty nice, but this was really like early around 9:30 where we traded above that short-term high, and then we inverse fair value gap and continued to go lower. There were lots of volatility there to bring it lower down to the sell side liquidity on the higher time frame. But this would have been a good trade if I had I wasn't on the charts at that time. I decided to just tape read. Like, I wasn't on the charts looking to trade. I decided to just tape read it, and until I was more confident with what was happening. And to be honest, I did try and long down here, but when I said I didn't find what I was looking for, it was an issue with the trade copier, and I was kind of disappointed. So that is another reason why I stayed out. But we had a nice run up with 9:30, and then price leaves this fair value gap, closes beneath the 5-minute fair value gap, comes back up into it. Again, if I had taken this trade, this would have been another 50-point stop loss. So another reason why I didn't want to look for trades, because of how volatile price was. I didn't really see what I wanted to see. All right, if I had a 15 or 20-point stop and I had gone short on the below that fair value gap or the inverse fair value gap, I would have gone stopped out. And I would have been needing to allow it to trade to that bullish order block, to trade to this inverse fair value gap, which may not have gotten me my fill if I wanted a stop loss I'm comfortable with. Okay, and then that's the trade I took. I kind of turtle swooped it when I started to see it go higher, and had a stop loss at that low, and it almost stopped me out, but then it continued to run higher. I don't have a recording of this because I took it while I was just about to leave the house. So I placed a trade, put my limit orders, and then I left the house because I had to go, and it worked out. Took profit when I was in the car, so I wasn't able to get this on video. But for those interested, I did take this on the 25K performance account, which is in deep drawdown that I talked about in my August personal recording, personal log. And so that account is it's only like $450 away from being back at break even now. And I took it with 2 micros, made $180, and then that's all with that. Those are the executions. Yeah, that's it. So yeah, one thing I need to remember, and I'll state this again, is pay attention more to the weekly chart. All right, because this could have been literally a trade that I could have taken. I mean, this is a seasonal tendency where I could have taken this on an actual portfolio, or I could have done an option call or something, and it would have really paid off very well. There was SMT at this high, and we came back and immediately rebalanced, and that could have been this could have been a bigger institutional trade that could have been taken with lots of money, with the amount of volatility there was this week. And really nice, not the best week to look for trades, but really nice technically on the higher time frame week. Like, this is one of those weeks where there is higher time frame swing trading or position trading entries, and so it was nice to see. And I'll be going into the next weeks expecting lower prices and volatility, and hopefully it will be better opportunities then. That's it. Thank you very much. Have a good day.